We're, 294 days or something now where the S&P 500 has been trading within 5% of its peak. Does that continue, and for how long?
Well, I wish I knew the answer to that. I think the global growth environment is pretty benign. Global growth 3.8% next year, US growing. So yeah, theoretically the market should continue to rise. I'm a bit worried, though, that there's just a bit too much complacency about, and that always worries me.
Thing is, there's good reason for that complacency in some ways, right? We've had a VIX and a MOVE index that have been going nowhere. It's accommodative policy still all around the world, not just here in the United States. Global liquidity seems to be holding up. What could cause a little ripple here? Well,
I think some geopolitical event, perhaps in the Middle East or Korea or wherever it might be. I think that's the kind of thing that will shake the market. But always it's something that comes from out the left field that you don't expect, that affects markets.
Martin, back in 2006, you made a prescient call about CDOs, collateralized debt obligations. A year later, you made another prescient call about credit default swaps. We know what happened after both those years. Is there anything of a similar magnitude? Are you looking to pockets of the market which are causing you similar concerns, or even close?
I don't think it's. I don't think we see that euphoria that we saw then, and everyone expected markets to go up. I think, though, people are confident about the economy, but they're, as I say, they are complacent, but they're also worried, and I think that's good. I don't see any real CDO type event on the horizon. I mean, my only worry is government bonds look very expensive, but the holders of them tend to be holding them for reasons that they have to hold them to hedge a known liability. So I don't see that there'll be big sellers of government bonds.
Even if the Fed, fulfills what it says it'll do and raises rates by 3 times this year, maybe even more, even if the ECB, takes its foot off the gas and maybe the Bank of Japan, does the same, you don't think that's going to shift bond market sentiment?
That would shift bond market sentiment. I think the mistake we've all made is thinking interest rates will be going up, and they've remained lower for longer over the last since 2007, 2008. So I think all of those things are priced into the market. And in fact, in some ways, if the Fed doesn't raise rates this year, that's more of a worry, I always think, for investors.